Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go and do an overall market update. It's going to cover a lot of different commodities like gold, silver, oil, natural gas, uranium, maybe some other stuff thrown in there kind of across the entire sector. Look at some ETFs, get a gauge of what's going on. We'll look at the dollar, the 10-year yield. We'll kind of look at all these things. I know we've got a pullback coming. We've got higher, looks like I'm just looking higher 10-year yield and higher dollar right now. So the way that I would sum this up is there's fear in the market. They think that the inflation trade is over. That's what the market is basically selling off. At least that's the signals that it's telling to everyone. And a lot of people are getting scared. So they're selling and lightening up on the commodities trades. And we'll look at the S&P 500 as well. We'll take a look at that. And I'll give you my financial opinion on all this. So we'll see, at least the way that I'm viewing it, which might be different than what other people are viewing it. Other people think that they're throwing in the towel. I'm not throwing in the towel. That's just me because we are still incredibly cheap on a ratio perspective. And we still have problems in the system that are energy related. And I don't know how they're going to fix that with interest rates. That's kind of what I'm thinking. But interest rates does kill the flow of liquidity coming into the system, but it will also and could also, depending on if they continue to increase interest rates, it could really hit the demand side of things. It very well could, but it doesn't fix the supply side problem. I'll just say that. But let's dive in. Let's take a quick look. We've got the dollar here. The dollar has been rocketing higher the past couple of trading sessions. It was up another 0.5% today alone. We are starting to break above this support resistance line. It was resistance line coming up, and we broke on through it last month, and we are starting to run to the upside. Now, obviously, you can throw in some lines here, a trend line. We could easily hit, 109, 110, depending on where it contacts it. And you could even probably put this guy almost like this, where we've got more of like a channel type deal going on, where it's been coming up in a channel. And we'll see where we head from there. You can also throw in and say that this was a breakout, and then it paused for a little bit. So it broke out, went sideways, and then we're starting to break higher. But we do have a resistance line right above it at about 109. So keep in mind that the DXY, the other currencies it's measured against, like Japanese yen and some other ones, they're having problems as well, the euro. And this is a better currency than those currencies at this time. The 10-year yield shooting higher. We're up 3.7%. We still have that resistance line going across at about 3.2%, somewhere around that range. If we look at the dailies, we're putting in a nice big bullish engulfing, meaning that we want to, basically this wants to go higher. That rates want to go higher. And usually rates and oil are correlated. Think of inflation and the 10-year yield being correlated. Which one drives which? Usually oil drives rates higher. And depending on what the Fed thinks, and I don't know what they know and what they think, but if oil is going to have a problem in the future when the Strategic Petroleum Reserve runs out, and we see a spike in oil prices, you're going to see a spike in interest rates. And I think what they're trying to do is front run that and basically destroy it before the oil prices get enough of a rally behind it. They're trying to destroy the demand for it. Basically throw us into recession. Perhaps, we'll see. I'm throwing a lot of speculations out there. But the 10-year yield and the oil price are very highly correlated. And oil moving up usually leads to higher interest rates, because the inflation from energy goes through the system, and you'll see it in consumer price index like Germany, Germany's energy prices have gone insanely higher, and it's blown up a whole bunch of different things in that economy. So the question you got to ask yourself is, why are they raising rates and what are they trying to stop? And people are going to say they're going to try to stop inflation. And inflation has two key components. The first component is liquidity from the housing market, which this will slow down and start to stop. I agree with that. When you get interest rates high enough, they can slow things down. But I don't know how they're going to fix the transition of that money into products, which is a energy component based. So everywhere that you see incredibly high energy prices, you see high inflation rates. And they're also coming to the end of a debt cycle where these interest rates are really going to start put pressure on all the debt that's in the system. So they're kind of in a corner. And I think what they're trying to do is raise it fast enough to try to kill whatever they can of the inflationary transfer mechanisms at this time, like the real estate market growing and maybe perhaps the demand for oil, because they're going to have to fight things differently in the future, very near future, probably. And it may still be inflationary with the credit cycle ending or coming more towards an end. And you're going to have some relationship between the debt creation and the amount of GDP that can be produced. And if you're limited by the energy in the system and limiting the GDP, I don't know. I mean, that's going to be the problem. They can't grow GDP in relationship to the debt that's being created. So we'll see what happens. But right now, the 10-year yield is heading higher, and bonds are heading lower. And this looks to me like bond prices want to continue lower. We're still getting that rotation of money out of bonds. And if I just do a simple trend line, we still haven't broken that downtrend line. We're still in a downtrend. So looking at gold's selling off. The gold market is foreseeing lower inflationary pressures. That's why it usually sells off. Now, is this a false breakdown? It's tough to say, and we won't know until more trading sessions get behind us. But the gold market is selling off at the moment. Silver is pulling back as well. We're at 1920. And again, I'd wait for this momentum to shift. I'd like to see some buying pressure before popping in any of these. And platinum is also down. Platinum, if we were to look, it's down 36%, minus 36%. And last bull market, I'm going to pull up last bull market just to show you. We started in 99. We took off. That was the beginning of the commodity bull market. This is where all our buying signals were in 99, 98 of the commodity to stock ratio. We pulled on up, and then we had a pullback of 37.76% from top to bottom in 2001. In 2002, it started to really take off again, and we really rocketed higher after that move. Is this a similar movement? And I would argue, yes, it is a similar movement, and everything is in alignment as the same as it was before. We had a housing market boom in the 2000s. We had a recession in 2001. We had a housing market boom from basically 2018 onward. We popped out of this big channel, or this big pattern, I should say, the big pattern. And now we're pulling back, and we've basically done a pullback almost the same amount as we did in 2001. 36.16% is where we are at today. That pulled back about 38%, so we're very close. This here was mid-cycle in a housing boom. This here is mid-cycle in a housing boom. The thing holding it back is interest rates. We didn't go into a 2008 top where we had a bunch of inventory. This pattern was created on purpose, guys. The fundamentals of platinum created this pattern where we've broken it to the upside, and now we're doing a retracement. The question is this fundamental? Are the fundamentals still intact for this to continue higher? And I think they are. Other people can, that's obviously debatable. And other people will disagree and say that the fundamentals do not match that. Then my question is, why do we have a big launching pad of a pattern right before a launch? Why was that created, and why do you think that will be stopped? If you have an answer, put it in the comments section. Love to hear your guys' opinion on that. Why would this be stopped? Why would we create a decade-long pattern for it to fail this breakout? And very rarely do these fail and not go anywhere. They can panic sell out. Remember, the medical event in 2020 couldn't stop the move of platinum. It still went higher and broke out of this pattern. What is bigger that's coming than the medical event? And if something is bigger, that means people know about it before. If something is coming, they know about it, and they're selling some of these things. And that means that it's pre-planned if there is something that's coming. XAU to gold ratio, the ratio still hasn't broken that out yet. And we have pulled on back a little bit. We're up again today, and it looks like it's trying to put some sort of bottom in here in the short term. I'm not saying it is bottoming. It's trying to put in a bottom. It's trying to turn this around. We have to see evidence that it turns around and starts to go higher. But it looks like it's trying to with these hammer candlestick patterns. And looking at GDX, GDX is still, a little hammer candlestick, but we're still in this downtrend type movement. We're still selling off. We have broken below this movement here, and you got to keep in mind the Federal Reserve and interest rates and everything that they're doing is trying to push this down. They're trying to push the entire commodity complex lower to lower inflation. The question you have to ask is, how successful can they be and how far can they push it? If they push it too far, can they basically destroy the entire, can they rotate the money out of the bond market? Can they destroy and have a recession, a pretty large recession, to kill the inflation? They're scared of something. I don't know what that something is. They probably think that the inflation is deeper. At least some of their rhetoric. They think that inflation's deeper than maybe perhaps what other people think. But right now, increasing interest rates, and they're trying to hold this all down. Will the market overpower them? I don't know. We'll find out here. And this is SILJ. SILJ also selling off a little bit. We're getting these hammer candlesticks like it wants to turn here and move higher. We're right at the support line, this white support line going across, where we've gotten some hits before and some hits coming from the bottom side. We've been trading all around this white line here, basically in the vicinity that we're in. And then Franco-Nevada, I'll just pull up Franco-Nevada. It's kind of the big boy royalty company. And here, let me draw this a little bit different. I'll come back. You can draw it that way where you hit it this time, and it's roughly right where it's at. And it's putting in this gigantic pattern. We'll see if we get support here. If we don't, we could very well pull on back below it. Crude oil, this thing's been all over the place. We're getting a little bit of a pullback here. We're at 98.47. I'm doing this a little bit before closing. If we were to look at the buy and sell points, we've got a buy point, a sell point, and a buy point based off of the commodity to stock ratio. And looking at some of this, if I were to kind of zoom in on last commodity bull market, we've had some pretty big pullbacks in this market, 53.19%. If I were to look at it from a time-based, a date range, we bottomed here, and then we came all the way to the bottom, which was about 1,127 days. That's when the bottom of 98, beginning of 99 was, all the way till the bottom of the first pullback. If we were to do that on ours, let's just take a look and see how that correlates. So that was what, 1,000 something days, 1,100 something days. There's 1,125. So this one here is 1,127 days. This is 1,125 days. And if we were to get a pullback or a sideways motion, that would put us at May of 2023. So could we go sideways or pull back for a little while? We very well could. How far that pullback is, we'll find out. If we do a 53.9% pullback, and I'm not projecting that, guys, but if it were to do something on the lines of that price would be from peak, and then about 53% gets us down to $60 if it were to do that pullback and repeat again. And the intersection point of that would be October of 23 at $60 if it were to repeat like it did last time. That is not what I am calling for, but I'm just saying if things were to repeat and we were to get something like that, then that's the case. Now, if we were to look back, you could also argue that the ultimate bottom was in 2016. And if we were to do a date range from 2016, and we were to come down 1125, there's 1124. We had one pullback from here to here, and then this was probably going to be a launch, but we had that problem in the markets where they held this thing down again. They've been holding this thing down for a while. The interest rates there, just to kind of see if this was the bottom there. And that this, remember, this was a forced shutdown to push this lower. But it looks to me like oil wants to go higher over time, and we'll see what happens. Natural gas is moving sideways. There it is today. We're starting to get a little bit more sideways. Buying pressure, but we still could end up in the 450-ish range. That's the bottom. That's a convergence of the bottom of this, somewhere in this range here, 440, 450. Then we have another line coming across at about 440, 450 as well. So it's possible we can get down there. And then if we look at XOP, yeah, you know me, we're down almost to that support line. The white support line hits these multiple times all through here. We hit it again through here, and we're right on top of it. So is this done with the pullback? It's difficult to say. Difficult to say, and that's why I don't trade in the short term. Everybody wants to time this stuff, and it's very difficult to do that. We've had a 39% pullback roughly from peak to bottom here on this most recent pullback. Are we going to head higher? I know everybody has that question, and we'll find out here at some point. But I would be waiting to see the buyers step in and give me a clear signal. Some of these stocks are putting in some wicks at the bottom. That's kind of the first stage, and this guy's pulled back 47%. That's the same as 44, 34, and 47. So this has had a little bit larger pullback than the other pullbacks that we've experienced before in this bull market. And is this the end of the bull market? I don't think so, but that could be debated. Could be debated. Coming oil services, OIH, another VanEck oil service ETF. It's pulled back 36%. 36%, and we're playing with this last trend line. And we basically are sitting on the trend line. We traded below it and we came back up. Will the buyers come in here and shift this to the upside? I have to see it, guys. I got to see it. I have not seen that yet. Coming on down, looking at uranium, it's still at $49. Looking at URNM, we are getting a little bit of some tails on these candlesticks. A little bit of a bullish hammer, perhaps, maybe. I mean, I got to see buyers come in here and show us that that we're alive. It seems like any good news that is released, we want to sell off. So I'm still looking for buying pressure. Still looking for the buyers. We have not seen that yet. So that includes basically the entire area of uranium. Looking at just Invesco Solar, Solar looks a little better. We got a nice, good big bullish engulfing. We came up, came back, and did a double bounce, and we're starting to try to move higher in solar. Now, again, guys, I don't own solar. I mean, I do own a little bit, but it's nothing, it's not a large amount. But it is something that I am watching just to see what happens. Coming back on down, COPX, copper has sold off, and we're starting to get some buying pressure right on this other support line that's down here. The support line, so basically what we've done is we've done a double bottom, bottom one, bottom two. We've broken out of that basing pattern. We've come down and we've done a full retest all the way back down to where we broke out. And that's where we're sitting right now, is on top of that breakout. And if you're going to look, these patterns, usually this side on this side over here is going to match this side over here. So the way that it fell has a high likelihood of how it's going to rise. And it won't be perfect, but it'll be similar. And it looks like we have a lot of good support at around $25 if it were to get down to there. But right in its general vicinity of where it's at, we've got some support. So that's COPX. The CRB to S&P 500, we are pulling back in it. We've got this little candlestick month. This is July that's pulling back. You go to the dailies, we have been selling off here for a little bit. Could we pull on back further to somewhere like there? We very well could. And right now, I'm just sitting on my hands, collecting, working, collecting cash, and I'm going to deploy at some point when I think it looks good. Now, this could turn on a dime, guys. It really could. And getting these bottoms is difficult when you're in mid-stride. It's, for me at least, it's easy to identify when this thing's bottoming, like down here. Hard for me to know when this thing's going to be getting a little bit larger of a pullback or not. And I know you can put a bunch of Elliott wave, you can count all the waves out, but a lot of the times that isn't 100% accurate. And even if you did know that, you don't know exactly how far this is going to come down. It's going to come down here. Are we going to see a 32% retracement, a 40%, a 50%, a 61.8? Difficult to say. So I remain long, and will try to time my purchases as best as I can for when this reverses. And the copper to gold ratio, and this is going to be weird, if we've got the 10-year yield going up, the copper to gold ratio typically wants to follow yields, or this leads yields, which means we're in a weird situation where we've got these sell-offs here, but we've got the yield, 10-year yield going up. So this usually wants to go higher. Now, if your copper to gold ratio goes up, that usually means that you're in a bullish scenario for commodities, in an increasing interest rate environment, an inflationary environment. So we're getting a nice, good hammer candlestick today. We'll see if this bounces. Now, is this a bounce of something that is coming back down, or are we going to reverse and move back up? And that's what we're going to have to find out. I still think the market conditions are good for a commodity bull market to happen, and that we're in a pullback, and perhaps this pullback's done. We'll find out. I don't like trying to make these, I should say short-term guesses, because that's all they are, just predictions, guesses in the short term. But we do have support right where it's at, and we'll see if we get a bounce or if we go sideways and then head lower again. If we head lower, I would suspect that the 10-year yield would head lower, and that a recession is most likely in the cards. And it could be, pretty bad if everyone's dumping their copper. If we get a bounce here, then perhaps that movement is already done. We'll have to wait and see. Coming on down, we've got the S&P 500 that's basically moving sideways. It hasn't broken its downtrend yet. So I'm not convinced here that the S&P 500 is just going to rocket higher. We're at the trend line for the NASDAQ composite. So again, I'm not convinced that this is just going to rocket higher yet. We have to see where this thing goes. If we have an increasing 10-year yield, I would suspect that the U.S. Composite Index would head lower. So we've got all these mixed signals, lots of volatility in the markets going down right now. Looking at the housing market, this is XHB Home Builders ETF. Again, this thing's got a little bloody nose. That usually is positive for a move higher if that were to happen. And then we also have lumber that looks like it's ready to shoot higher. I thought if we were in a recession that lumber would be lagging and moving lower. Maybe this is that move and that we're about to head higher for lumber. Lumber does look like it's putting in a gigantic pattern, just massive, where we had, and this is what I'm talking about, the waves, kind of the first wave here, the pullback, another wave, and then we get another big old wave. Now there's got to be one back here somewhere. And there's your big movement. And then we have the consolidation period after it. And I don't know if this is necessarily done. It looks like it wants to go higher. If it wants to go higher, that means there's demand for lumber. And if there's demand for lumber, that means that the housing starts perhaps aren't done yet, which makes me think that we are in a middle of a housing boom. And if you were to look back and you were to look at 2008, you've got a declining lumber coming down. The top of it happened in 2004. So this weakening was happening before the crash. But right now, we're in a consolidation period. And that period here's your consolidation period that we've got going sideways, and this looks like it wants to strengthen. To me, this looks like it's priming up for some large move. But again, we'll see what happens. And it looks like we're adding strength, not weakness. So based off of lumber, it doesn't look like to me that this is going to be some bad problem. Now, if we were to do a lumber to gold ratio, this is another one that some people use. It's strengthening right now. Let's go to the short term. It's been strengthening this past couple of trading sessions. And to me, I mean, that's good for commodities, not bad. And that's the housing market too. So we'll see what happens. Again, I'm going to be watching all these different ratios. And if you guys want to follow me, definitely subscribe to the channel here. And definitely subscribe to my website with the Platinum membership in the description link if you want to join. And you can ask me all these different questions and how we use this stuff. Looking at something like cocoa futures, yeah, it's dipped down briefly underneath its support line, but is this a false breakout where we're going to break higher? I would imagine so. It's not like fertilizer's been cheap. And if we get massive food price hikes around the world and energy price increases, I would suspect that raising rates isn't necessarily going to solve that problem. The rates are all liquidity driven. They're not. The damage has already been put into the system, and I think it's going to take time for this to work its way out. Here's wheat prices, and I know they've got some pretty large, sell-off here, pretty big pullback. Is that pullback done? Not yet. We have to wait for the buyers to come in here and show us that they're alive. But we're seeing it kind of across the board. That's wheat. Soybeans has had a pretty good size pullback here. We've seen it in corn as well. That's really had a big pullback. And it looks like we're trying to put in some sort of short-term buying pressure here. But again, I wouldn't be jumping in front of that momentum train in the short term. So are we going to come back and stay in this level? We'll have to find out here. We'll continue to monitor this stuff. Here's copper. Copper continues to sell off. We're getting a little wick at the bottom. That's good. There's your wick at the bottom and buying pressure today. It was an up day today, but again, I'm not convinced. This is a lot of momentum here. I got to see some buying pressure. We'll probably go sideways before moving higher in copper. And then looking at this is the producer price index of commodities. They are still rapidly higher, but that's the last data point was in May. This could change dramatically looking forward for July. And then the U.S. housing starts has pulled back. We're waiting for more data, which usually comes out middle to end of the month for that. And fertilizer prices, that continues to head lower. Here's the VanEck Agribusiness ETF that has pulled back. Again, though, we're sitting on top of gigantic patterns. We've had a big first wave move. And usually when you look at these waves, if you were to look at it, you get a first move, a third wave, and then it goes sideways for a little bit. And this is a fifth wave. And now we're probably going to come into some period of consolidation. After that consolidation is done and we stay above this pattern, I do think that we're going to see a big move higher after it. And perhaps that's what the Federal Reserve is worried about. It's not the move that's happening here necessarily. It's the move that happens later. And they're trying to get the interest rates up high enough to slow that move, or the money in the system already, the money that's already in the system, to slow that all down and prevent other money from coming into the system. Because usually what happens is you get interest rates that go up. So what happens is this starts to move higher. Interest rates start to go up. That's interest rates there. You get a pullback at some point, and then you get another big, huge surge. And what happens is all the retail investors, they see this move here and they want to invest in here. And then they all get shaken out on the pullback. And the pullback will be some sort of like ABC correction like that. And then you get another big, large move. But and retail never really got to enjoy any of the fruits of that investment. But I'm riding the whole thing. I don't know how far back this will go. This pullback at the moment is 24, 25%. And again, that could pull back quite a bit from top to bottom. If I were to do it from the bottom here, we're at the 0.382 fib retracement. Could it go to 0.618 and do a full retest, which aligns with this breakout? It very well could. If it does, that would be a huge buy point, because all these patterns are massive in size, and they break and then they do a retest perhaps, or they come back somewhere in this general vicinity and then they take off again. Aluminum looks like it's trying to get a little bit of a bid, that the opening and closing price is starting to narrow down. That's what we've got here. We're right sitting on top of this breakout, and we basically have done a full retest move, almost. So that's looking a little bit better. The Baltic Dry Index, that one's also getting a little bit more selling pressure. It looks like we got selling pressure across the board in the Baltic Dry Index. So looking at all this stuff here, and I know a lot of people, they want answers. They want someone to tell them what to do. And right now, it looks like we're having a pullback. That's what we're having. The bigger question that everyone should be asking is this mid-cycle of a larger commodity boom, or is the commodity boom done? And if I were to think that the commodity boom were to be done, what I would see or typically see is a sell-off. You get a big sell-off, and you would see a selling pressure in the real estate market, and you'd see a whole bunch of inventory. I'm not convinced that we're there yet. Maybe we get there, but it'd be interesting to see what interest rates do if they were to come back down, and what the housing market would do and how it would respond. Also, being at the end of this credit debt cycle, we'll see what that brings into the mix as well. Can we raise rates as high as we need to? Will a recession happen, and will they continue to raise rates in the face of a recession? I don't know. This is now not a free market, but it's a market driven by people who are trying to control everything. Would a free market have interest rates go up as fast as they did in the mortgage market? Remember, they were in there jacking around with mortgage-backed securities. They were jacking around with yields. And when they stop buying something, it's going to really start to move to the upside. So they're going to have to control movements now. At this point, they're trying to control everything. They're trying to control the speed of the movements. They're trying to control how much they buy or not buy. And they own a bunch of this stuff. So it is a very managed market at this point. but the pressures is where I'm looking. I think the pressures will remain to the upside, and we'll see what happens, because now they're backed into a corner. They're either going to fight inflation, cause a recession, or further cause even a deeper recession if they continue to raise rates, or they back off on rates, inflation pulls back up, and you pull out of a recession, but you could have low growth and high inflation. We'll see which way they choose. Obviously, I don't like being at the mercy of a Federal Reserve, and they're going to have to start making decisions at some point saying, we're going to continue on it and basically hit the bond market very hard. But there's a lot of people that are invested in bonds that have to be in bonds, like pension funds and all this other stuff, where they could create larger problems in the system. So I would think that the way that they would do this is that they would hold rates low, hit the inflation button, and try to inflate a lot of these debts and obligations away. But we'll see. We'll see what happens. And if you guys are interested in finding out what happens, definitely subscribe to the channel here. I'll continue to look at this and monitor it. And if you want to know how I'm playing these bets, if you want to know how I'm investing and positioning for what I think is an energy crisis and a continued move in energy higher over time, remember, things don't go up in a straight line. You can obviously join the website in the description link below, become a platinum member. You can join the question and answer sessions that I have on the weekends. We'll have another one. It'll probably be Sunday night because coming back, it's going to be too tight to have it be early morning. But Sunday night is probably the time frame, 7 p.m. Mountain Standard Time, if you want to know. That's probably what I'll decide on. And you can follow what I'm doing. So that's what I've got for today, guys. Hopefully you enjoyed the clip. We'll catch you next time. This is Finding Value.